Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, July the 21st. Wanted just to discuss briefly what happened last week in markets. Last week was another down week in the equity markets as the S&P 500 finished the week down 70 basis points, and the mid cap index, the S&P 400, was down 50 basis points, and the small cap index, as measured by the S&P 600, was down 50 basis points as well. And what's fascinating is at the end of last week, all those three indices were all three down for the year, 18.9%, all three in sync year to date. And what sent markets lower last week was it really started with Jamie Dimon and JP Morgan's earnings call when JP Morgan missed on the bottom line, which is earnings per share, which is their profitability, as they put away more capital for loan loss reserves. And Jamie Dimon, their CEO, warned of economic slowdown in the future. And so what the market said was more and more companies are going to miss this quarter on their earnings. There's fears of that. We're heading to a recession. So that was all being priced into the equity market. And as we started off this week, we started off very cautiously optimistic after we got earnings on Friday from Goldman Sachs, Wells Fargo, Morgan Stanley, and Citigroup, which all exceeded expectations. And you really saw a steep rally in the market last Friday, followed through so far for the most part this week, with the exclusion of Tuesday of this week, as what we are hearing from corporations and corporate earning reports is it's not as bad as investors had feared going into this week. And what we have been seeing in the last few sell-offs, in the market sell-offs, is you're actually seeing more buying pressure than selling pressure in these market sell-offs. More people are actually in buying on a technical basis than are actually selling stocks, and your volumes are decreasing. So at some point in a market correction, you're going to reach a precipice or a point where the sellers are just gone. Everyone who has wanted to sell and get out has sold and gotten out. Now that doesn't mean that there can't be something that comes up in the news over the next couple weeks or month that takes us another leg down. That's not saying that that's not feasible, but what we're seeing at River Place is we're seeing stocks in the S&P 500 with 70% positive money flow. And that means that 70% of the stocks in the S&P 500 are closing on average above their arithmetic mean for the day. So they're showing more buying pressure for these stocks. This is all encouraging news, and we really believe we're set up here to really kind of maybe set up with a rally. One of the things that tells us that and tells us that we can move higher is what let us down was growth stocks, and you could really see that in the NASDAQ. And as we've rallied this week, the leadership this week has been the NASDAQ. It has been the outperformer, well outperforming the Dow Jones and well outperforming the S&P 500 itself. Well, that's the one that was beaten down the most, and it makes sense that it was going to be the one that's going to lead us out and lead us up and be the leadership just to catch up to the other indices. And so there is confidence back in growth, and investors are weighing the reality, if we are even in a recession or there is one, that it's going to be mild, not the crisis that we had in 2008. And one of the encouraging things from the calls, and Bank of America's call on Monday was wonderful to listen to, as Brian Moynihan helped really give us some encouragement that consumer spending is up for the first 2 weeks in July versus July of last year. So even with high inflation, the consumer's balance sheet is still strong enough to absorb these costs. And the balance sheet is at the strongest it's been in decades. The other encouraging piece that we heard out of the banks is how well capitalized corporate America is and corporations are. They've said, some of the CEOs have said that they haven't seen businesses this capitalized ever in their history. So we're set up well to weather a small storm. So don't be surprised if you see some marching higher for the next couple of weeks as we continue to get earnings reports in and they're not as bad as was feared. So as always, if you have questions about what's going on with your individual portfolio or ways that we can help you navigate this market, feel free to reach out and give us a call. And you can reach us at 904 346 3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your day. Thanks.